Okay, last section of the presentation, and possibly the most important, what are the current regulations and what are the tax implications of investing in cryptocurrencies? Okay, so first to the punch was SARB quite early on in 2014, when probably most of us weren't even aware of cryptocurrencies. SARB came out and released their position on Bitcoin and cryptocurrencies. Very simple opinion, that cryptocurrencies are not legal tender and probably never will be, and that they cannot be used to avoid exchange controls. And that applies to any asset or any monetary instrument. Individuals cannot breach exchange controls, and Bitcoin and cryptocurrencies are no different. Beyond that, it falls outside of their scope, so they are unlikely to issue any more guidance as the Reserve Bank. Okay, then secondly, slightly later on, April 2018 was the first advice that came out from SARS. And again, pretty simple. And it dispels the notion that many people assume that cryptocurrencies are not regulated. This guidance gives us enough of a framework to understand how to treat these assets. So what did SARS say in 2018? Essentially, they labeled cryptocurrencies as an asset of intangible nature. So it's treated exactly the same as any other type of intangible asset. And taxation depends on how the investor used that asset and treated that asset. I'll go into a little bit more detail on the next slide. But before we move there, probably the most important regulatory body of the slide is the IFWG, and perhaps one that most of you have not heard of. That is the Intergovernmental FinTech Working Group. So they are tasked with regulating fintech, and cryptocurrencies fall under that classification. They consist of members from all the major regulatory bodies: National Treasury, Reserve Bank, Financial Intelligence Center, and FSCA. They have released 2 papers, the most recent being in June of this year. And it's a very detailed policy recommendation. And it speaks towards how cryptocurrencies will eventually be explicitly regulated. Overwhelmingly, it's positive. They recognize the innovation. They recognize the demand that the market has for these assets. And they are seeking to bring it under the regulatory purview and officially put those rules into law. So what we think will happen is there will be a classification for vendors known as a CASP, Crypto Asset Service Providers, and there will be a specific licensing category for those providers as well. But until then, we use the framework that we have from SARS to handle these assets. Okay, so just zeroing in a little bit more on tax and what those factors are that determine how cryptocurrencies get taxed. It's a gray area, so it's not black and white. And the major factors to consider is the investor's intention, their time held, of the instrument or the cryptocurrency. In general, the threshold is set at around about 3 years. But again, that's not black and white. It depends. All factors are considered as a whole. It depends also on their knowledge and their understanding of the market. And lastly, their circumstances for liquidating that investment. And those are the factors that will determine whether gains are taxed as income or as capital in nature.